This video is sponsored by Bityard. With over 400 cryptos to trade on their spot, perpetual coin futures, USDT futures, with leverage of 1x to up to 125x, you can trade foreign exchange, commodities like gold, silver and oil, and traditional markets like Nasdaq, all with some of the lowest fees available on any trading platform. You can use their copy trader to copy other traders with better performance than you, or you can become a copy trader yourself and earn a few extra percent from the people that follow you. Plus, you got 9 out of 10 stars from the Coin Bureau guy. Bityard. Hello everybody, welcome back. So I'm going to present to you what could be the low coming in now for Bitcoin. So this could be the absolute low. I know you hear this every other day from everyone, and no one really knows. But we're going to have a quick look and I'll show you a few things. So this morning I showed the target of 16,000 based on the head and shoulders that could have been formed here on the weekly. And we just do a quick measure move. It's very crude and crooked here. You measure that from the breakdown zone and it brings us to this area roughly, I suppose, between 16 and 14,000. So this is looks like where we're heading right now. So that matches up on a price target. Also back in the olden days we had this capitulation here. We marched up towards 20,000 and got front run and dumped down to our previous resistance, which is here, just basically 16,000. So there's a couple of areas amongst the 16,000 area why that might be a bottom. So I showed you that this morning and just thought I'd reiterate that now. The next thing that we're looking at is this. So a lot of people have been waiting, the market effectively has been waiting for what's known as a capitulation dump, right? A big, massive capitulation in the market, given to us on a volume signature, an extraordinarily large red volume, and we're approaching that now. So this is so far the third biggest read at the moment. Again, the week hasn't ended yet, it's not closed, it won't close till tomorrow, but it's looking like this could be the one that we're looking for. It might not mark the absolute low, but it would be the kind of the signature that we're looking for, marking a potential low capitulation. Again, this was your your May dump, and this is your March dump. Both of these were quite significant and quite fast, being what is known as, I suppose, close to capitulation. So over the space of a few weeks we found our all-time high here and we dumped down to the tune of 53% very quickly, and that's what causes these red candles. Big sell-off, basically. Everybody's selling off. Panic sell. Unnecessary selling. And then one prior to that was this one. This is your March crash, which basically launched over a period of 3 weeks to the tune of 59%, sorry, giving us the biggest, the second biggest volume signature on read here. And at the moment, like I say, we're printing the third biggest. Now, second to all of this, we've got the money flow index divergence that we can look at. So this marks the end of the bear market last time. Big dump down. Obviously, as far as the volume is concerned, back then this was the biggest we'd ever seen. Market cap obviously being a lot smaller, but you know, as far as the chart is concerned, massive volume. So capitulation red. Obviously, that's nothing in comparison to what's been going on recently. I suppose over the last couple of years, much bigger redder candles there. But the thing to take away is, yeah, we got the capitulation marked on the marked with the volume, but we also got our money flow index finding a low here, which obviously isn't the low, and then we got the divergence, which did find the low, which was on this. So low dropped by 50%, higher low on the money flow index, marking the absolute low. We got the same thing here as well. So we got this low formed here around 7,000 or so. We moved up, capitulation dump marked on the volume signature with a higher low on the money flow index, and from there we moved up. So this is something we've been looking at for a little while, saying that, look, this is a very pronounced low on the money flow index. The divergence is going to be very difficult to not have, but the problem is we don't know where the low will be. But what we can say is, wherever it is, if we do get capitulation in the market, which it looks like we're getting at the moment, this would mark the low. And again, look, this is such a pronounced low here that we could have divergence here. We could have it at much lower prices. That's been the problem that we've had. We've recognized this from all the way up here, breaking down even further with the money flow index fine, further. So the price can go further and further down, and we've been aware of that. But now that we are getting, or working on getting, what could be a very high read over here, this could be the one that we've been waiting for and we're looking for. And again, this is knife catcher's delight, really. It's the ultimate knife catch, where capitulation is where price goes way beyond what is reasonable for the asset that you're buying into. And it's what a lot of people have been waiting for, and I think all markets are waiting for something similar to this. So now we're approaching these areas, 16,000, 14,000, maybe 12,000. all of that is completely fair game right now, as capitulation really doesn't reflect supports. We can see that supports haven't really been reflected fairly on any of these charts, to be honest with you. The other thing to be aware of for altcoins as well is that in the form of this capitulation for Bitcoin, altcoins have been having a good time recently. So I've just finished doing a stream there, and the Bitcoin dominance has been approaching this significant low down here. So I'll turn my indicators on. They're a bit messy, but there's only one thing to focus on here, which is the center of the Bollinger Band on the weekly. So the weekly Bollinger Band center, which is more or less where we are right now. It's floating at this level here, 43.3% dominance, where I think we'll probably catch a bounce. So we managed to rotate from Bitcoin into altcoins, so making some money out of that, or at least stacking some sats out of that. Roughly between 30 to 50% is what's been made over this last week, and now it's time to get back into Bitcoin, despite the way it looks. All right. For me, I'm not saying you do that, because the chances of us bouncing at this level are quite high. And again, it was against what most people were thinking. Most people thought that, you know, we're just going to break out from here and go for it. Could have been coincidence, or it could have been perfectly called. I don't know. You make your decision there. But it looks as though the tide will turn, and we will start to see dominance increase again. Now, if it doesn't, that's really good. And like I said on a video, I think last week or the week before, I highlighted a handful of altcoins which I'll be buying in a capitulation dump anyway, because the capitulation of the overall market is going to be driven by Bitcoin, and if Bitcoin brings the overall market down, it brings all the altcoins down, and they go down to areas that are extremely good for long-term positions anyway, and worthy of picking up. But it doesn't mean that they're going to outperform Bitcoin. It doesn't mean any of that. It just means that actually they come down to significant lows, maybe even marking the all-time lows that are coming in. And again, they could be, we don't know where those prices will be. That will be given to us by what we would say would be capitulation in the whole crypto market. It's going through massive meltdown at the moment, and so we should only imagine that altcoins, despite increasing their Bitcoin pair and stacking sats with all of that, we should imagine that they obviously, I think the party is over for them. So yeah, it looks like we are working on that now. It would be great if we had it over this weekend to complete what would be this red candle, but if we don't, so be it. There is signs of this all coming to, although it being very different to previous cycles, it still is matching up with certain signatures on the chart, the ones that you would look for to buy the extreme lows. So I've been buying all the way down, obviously, since selling around 54,000. I've got plenty of money available on the sidelines, and I will be looking to make a manual buy, to be honest with you, after assessing the damage if and when we come down to these really significant lows. Like I say, 16,000, 14,000, 12,000, 8,000, you know, your guess is as good as mine at this point, but the signatures are what we look for, and the ones that we are looking at would be volume, then shown here, higher low shown here. And preferably if we can match that with a significant area of support, whether it's 16, 14, 12, you know, like I say, your guess is as good as mine, but provided we maintain all of these other criteria, it seems reasonable to me that that's capitulation in the market. Right, I'll leave it with you there, but thank you for watching. Hope you have a nice day or evening. Enjoy the rest of your weekend. Take it easy.